Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. An immediate countering key reversal up yesterday, offsetting the previous session's combined bearish engulfing pattern and bearish closing black Mariposa. This time, the market penetrated a combination of the February 2012 high at 83.50 and the lesser Fibonacci line at 83.70, closing just over both. Prices went as high as the September 2012 high at 84.24 before pulling back. Meanwhile, the support below was more or less still the January 2021 high at 82.39. I feel obliged now to point out the real feature of last week, the weekly key reversal down. This is a significant pattern given that last week saw the highest high since late June. The creation of this pattern, I suspect, is due to one reason, the declining long moving average overhead, currently 85.26, impacting the top of the market. I do not at this stage think yesterday's strong bullish pattern has offset this bigger bearish pattern, but it is worth considering as the next major overhead resistance is the long moving average. Looking below, we have congestion at 81.77 and then the lesser Fibonacci line at 80.16. It is at that level that we saw some congestion build up in mid-November between 79.80 and 80.47. Plus, we have the rising short medium moving average, currently 79.99, moving in there as well. In the big picture, the market is still within the mid-July to late August based bull channel, currently 7600 to 87.44. Interesting, last week's key reversal down does offset the weekly key reversal up seen here 3 weeks ago. So far today, a move up towards the September 2012 high, but not quite testing it, and a dip down to the February 2012 low 83.50, but right now looking like an indecisive doji cross. LME 3-month aluminium. An indecisive spinning top yesterday after the previous session's unusual bearish engulfing pattern. The notable feature of yesterday's action was the long tongue on the top of the move. Not excessive, but enough to be noticed. We still have the combined support below, consisting of the June 2018 high at 23.53, the flatlining short medium moving average, currently 23.56, the flatlining medium moving average, currently 23.42, and the lesser Fibonacci line at 23.45. Below all these, we have some free air until the October 2018 high at 22.67. Meanwhile, overhead, well, there is some congestion at 24.41 and 25.08, the latter being a bit stronger. But you would have to rise up to the congestion that starts at 25.63 and stretches up to 26.75 area to see something significant. Within that overhead band of congestion is the declining long moving average, currently at 26.05, which makes the opportunity for the market to reach target X1 at 26.52 the harder to reach secondary target for the late August to early November diamond bottom pattern, and something I've been harping on about for quite a while now. Well, it makes it just that much harder to reach. So far today, a slightly higher open and move higher, but not by that much. We're still in fairly free territory overhead now. I say up to that congestion at 24.41, which isn't that great, as the better stuff is at 25.08. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.